All right, switching gears here, the Internal Revenue Service announced a welcome cost of living adjustment to the U.S.'s marginal tax rate that will increase the take-home pay for many workers in 2023. Joining us now with more on the latest tax brackets is Blue Ocean Global Wealth CEO Marguerita Cheng. Marguerita, good to see you here this morning. So what do these changes mean to the average consumer?
So this is actually positive. Who would ever thought inflation is positive? But because inflation has been at the highest level in 40 years. What that means is you could find yourself in a lower tax bracket because the IRS has raised the income level. So you could be earning the same, if not slightly more, and still end up in the same tax brackets.
Okay, so, all right, help me understand this. Like, how quickly does this go into effect? I mean, is this just immediate?
Sure, I definitely can understand. So I know that we just finished taxes in April. There are some people who filed an extension, so they just submitted their 2020 return October 15th. And I know we're in 2022, and 2022 is not over, but we are planning for 2023. So here's the takeaway. The U.S. tax system is not a flat tax system. It is progressive. It's graduated. So there are, as you can see on the screen, there are 7 tax brackets. The lowest is 10%. The highest is 37%. So I want people to understand is if you find yourself in the middle, 24% tax bracket, that does not mean that you pay 24% on all $364,000. You pay 10% on the first 11, then from 11, then it goes up. So that's what we mean by graduated. So this does go into effect for 2023. And the reason why it is going into effect is the IRS has made adjustments. I don't need to tell you all that inflation is real. And this is based on cost of goods and services for 80,000 items.
Okay, and so with all of this in mind, how does this actually impact the real take-home wages for people? Does it change anything there?
So assuming your income is the same and your income has not gone up, you very well could be in a lower tax bracket. The other takeaway is the IRS has raised the standard deduction. So they have raised the standard deduction for somebody who is single by $900, and they've raised the standard deduction for somebody who's married by $1,800. So what that means is you certainly can itemize your deductions, but if your itemized deductions do not exceed the standard deduction, you'd be better off taking the standard deduction. So that's essentially how it can impact everyday individuals and families.
Marguerita, since these changes have come to light, what are some of the biggest questions you've gotten from your clients?
So the first question is, and this was surprising for folks, so what can we do about this? How does this affect me? So the first thing I've told people is you want to visit the IRS tax withholding calculator, just because you don't want to be unpleasantly surprised. So the first thing is check that out. And if you do need to adjust your withholding, you want to complete a W-4. The other thing that people have asked about is the limits. The IRS has increased the 401k contribution limit by $2,000. So that is a very significant increase. So for individuals under 50, they can now contribute $22,500. They can also contribute $500 more to an IRA or Roth IRA. They can also increase their contribution to a healthcare flexible spending account. The thing that has been shocking for people who have young children is the dependent care spending account amount has not been adjusted. It is still at $5,000. So this is how it has impacted individuals and families.
All right, our taxes.
For retirees as well.
There you go. Thank you so much for breaking this down. Tax is a place that we never want to be unpleasantly surprised at. Global Wealth, Blue Ocean Global Wealth's Chief Executive Officer, Marguerita Cheng. Rita, thanks so much for taking the time here with us today.